Mark, it's one thing for a $1 billion company that has a short interest of 100 maybe plus% on there. It's completely different when it comes to a fairly liquid precious metal. What exactly is the purpose of going after silver?
Well, look, Dominic, I think the challenge for all of us right now is markets have become much less liquid. You would think we were more liquid as we grew and had more participants. But I think in certain parts of the market, whether it be small cap stocks or certain tech stocks, or now you see the precious metal, there's just not a lot of incremental liquidity, and it makes for easy targets for people who want to get on the other side of people who are short.
But why silver? Why not gold? Why not palladium? Why not the PGMs, right? The platinum group metals that many people talk about here. There are some out there who believe that it's just the lower price tag per ounce. It gives them more ammunition, so to speak, right? More ability to buy more shares, more ounces of silver. Is it simply that just the price of silver is only $30 compared to $1,800, $1,900 for gold?
Yeah, look, I think that's definitely part of it. I think one of the things about the small traders is they do prefer smaller price tags. But, this is not new, right? There seems to be nothing new in this world, Dom. We saw the Hunt brothers try to do this many years ago, corner the silver market. And I think, gold's a gigantic market, $8.7 trillion of total value around the world. Silver is significantly smaller. Orders of magnitude smaller. So if you're going to attack an area where you think you have a chance to do a squeeze, you're going to go after the smaller.
How much of this, what can be characterized, and I'm looking for your kind of expert opinion here on this, how much of the action that you've seen in things like GameStop and AMC, and maybe what's happening with silver right now, you brought up the Hunt brothers, what exactly in your mind can be considered market manipulation versus just the market's normal activities squeezing certain people out?
Well, you bring up another great point, Dom. It's clearly manipulation. When you think about low volume securities and the ability for a small number of individuals or larger groups to take significant positions that drive a stock in a certain direction, think about what happened to certain oil stocks during the COVID crisis when the Saudis came in and bought up big parts of those companies, and they spiked after the fall. This has been going on for many, many years. And when somebody has a public platform or a pulpit where they can talk about what they're doing and other people follow on, I think the one myth, though, is that this is a bunch of people, up early in their home, turning on their computer and trading a few shares. That's not what drives these big moves. It's the institutional money that comes in after these waves and really push things. So if you look at GameStop, for example, the average trader isn't the one making the $50, $100, $1 million moves. It's the big institutions following on those trends.
You hit the nail on the head here for me. I was just going to ask you, we talk about this notion like it's just retail traders who are doing this. But at some points here, you see trading volumes in GameStop in the 40, 50, 60, hundreds of millions of shares per day. That is not just retail traders. That has got to be attracting some kind of institutional money. I'd be surprised if I was a hedge fund manager and I had capital to expend, why I wouldn't try to hop on this train as well. How much do you think this kind of market activity will then end up bringing in the institutional trader, thereby taking away a lot of the thesis about, hey, Wall Street's losing in this whole thing, it's retail traders winning?
Yeah, Wall Street doesn't lose. This concept that somehow the David and Goliath applies here. Remember, think about it. What does Robinhood cost the average trader? That would be zero. Why is it zero? Well, somebody is paying Robinhood. Oh, wait, it's the big high-frequency trading hedge funds who are buying the data from Robinhood. They're then front-running. They're trading ahead of the retail traders. So the retail traders, while they think they're getting a good deal, and some of them, look, they've made lots of money and there's many great stories. But at the end of the day, those institutional buyers and sellers are doing all of the big movement. And I do agree completely with you, Dom, that it's not the little guy or gal that's driving the price. They may be setting the target through the activity on the bulletin board. But again, that's not new either. I posted on my Twitter stream last week a story about a 16-year-old who got arrested and then charged by the SEC for fraud for posting on a bulletin board in 2000, so 20 years ago. So again, nothing new in this world.
All right, and before we let you go, it seems like forever since we talked about some of the frothier parts of the market being things like in the IPO market and SPACs, special purpose acquisition companies. Yep. They were supposed to be that sign that things were kind of spilling over. Do we still worry about the SPAC market right now?
What we worry about is any company that comes to market at a bad valuation. One of the things we just did, Morgan Creek and our partner Exos Financial, we just launched an ETF, an actively managed ETF, SPXZ. And the idea there is that if you think about SPACs, they're just a legal structure, like a mutual fund or any other legal structure. So what matters is the underlying company. And yes, there are certain underlying companies in any IPO boom, whether it's now or whether it was 20 years ago in 2000, 21 years ago in 2000, where you're going to see things that don't make sense. And so I think buying anything in the markets today that's indexed or capitalization weighted, I think is very, very dangerous. Indexation and capitalization weighting are great momentum strategies. They're great for a bull market. They're great for liquidity. You just had a story on where they're talking about reducing the amount of stimulus in the economy. I think that means a lot of overvalued securities, whether they be SPACs, IPOs, or just traditional stocks or even bonds, are going to struggle in that environment. So active management is key, and that's why we launched our new ETF.
Shepard Smith here. Thanks for watching CNBC on YouTube.